Welcome to Tesla Daily News podcast on January 7th, 2026. Today, we're tracking a rebound in Tesla shares, fresh detail on Cybercab timing, and why the autonomy and robotics narrative is getting more competitive, plus a quick reality check on a viral Tesla phone rumor. First up, Tesla stock bounces hard as the market reprices the robotaxi story. The hook here is simple. After a rough 7-session slide, Tesla snapped back with a strong, high-volume rally. Context. When a high-multiple stock like Tesla sells off, it usually means investors are debating the core long-term pillars, autonomy, software margins, and scaling new products, not just next quarter's deliveries. Details. One report noted Tesla shares rose about 3.1% to roughly $451 and change, after falling more than 10% over the prior 7 trading days. Trading value was enormous, over $30 billion, suggesting this wasn't just retail noise. Impact. A high-volume reversal can matter for near-term sentiment, especially for traders watching momentum and for analysts assessing whether the market is stabilizing ahead of the next catalyst. But it also tells you the robotaxi narrative still commands attention, even as delivery growth cools. Takeaway. Price action doesn't fix fundamentals, but it does show investors are still willing to pay up for autonomy optionality when there's any credible timeline signal. Second, Cybercab timing gets more specific, and investors should treat that as both bullish and risky. The hook. Elon Musk is pointing to Cybercab production momentum at the Texas factory, with a target around the second quarter of 2026. Context. Tesla's valuation has long embedded a future where robotaxis and software revenue expand margins far above traditional auto. Timelines matter because every slip pushes that cash flow story further out. Details. The reporting cites Musk indicating Cybercab mass production cadence will ramp at Gigafactory Texas, with the timing landing near the second quarter of 2026. Impact. If Tesla can show real, repeatable manufacturing progress, not just prototypes, that can improve analyst confidence in the product roadmap and provide support for the autonomy multiple. The risk is regulatory and operational. Robotaxi deployment depends on approvals, safety validation, and real-world reliability, and the market will punish overpromising. Takeaway. Watch for concrete proof points, pilot fleet size, factory line readiness, and any measurable milestones Tesla shares in official filings or earnings calls. Third, the competitive robotaxi field is widening. Lucid, Uber, and Nuro just put a stake in the ground. The hook. A Tesla rival is now tying itself directly to the biggest ride-hailing distribution platform in the United States. Context. Tesla's strategic advantage has been vertical integration, vehicles, software, data, and potentially the network. But distribution is a real moat in ride-hailing, and Uber already has demand. Details. At CES, Lucid, Uber, and Nuro unveiled a production-intent robotaxi, aiming to launch service later this year in the US, with initial mention of the Bay Area in some coverage. Lucid's involvement signals that premium EV OEMs are willing to become autonomy platforms, not just car sellers. Impact. For Tesla investors, this is less about Lucid's unit volume and more about narrative and partnerships. If Uber becomes the default marketplace for multiple autonomous fleets, Tesla's path to a proprietary network could face tougher consumer acquisition dynamics. Takeaway. Tesla bulls should track whether Tesla plans to own the whole network experience, or whether partnerships become necessary in some markets. Either way, the robotaxi prize is big enough that well-funded competitors will keep showing up. Fourth, Nvidia is coming for autonomy, and this is a direct challenge to Tesla's software leadership narrative. The hook. Nvidia unveiled a new autonomous driving AI approach and is pushing reasoning models, not just perception, with real automaker integration. Context. Tesla's approach is tightly integrated and camera-first, trained on its own fleet data. Nvidia's pitch is different. Provide a robust platform that many automakers can adopt, accelerating industry-wide capability. Details. Multiple outlets highlighted Nvidia's CES announcements around autonomous driving software, including an open approach and plans that include shipping into a Mercedes-Benz CLA in the first quarter of 2026. Another set of reports described Nvidia's ambitions for robotaxi services in 2027 with a partner. Impact. The big risk for Tesla is not that Nvidia beats Tesla alone, it's that Nvidia enables everyone else to close the gap faster. If many OEMs can buy a powerful autonomy stack, then Tesla's differentiation must come from either superior real-world performance, better economics, or faster regulatory clearance. Takeaway. Watch Tesla's response in product velocity, full self-driving capability gains, intervention rates, and any evidence of smoother scaling across regions, because the only Tesla can do this story is getting harder to defend. Fifth, Robotics in factories is turning into a real arms race. Hyundai and Boston Dynamics are pushing hard, and investors will compare it to Optimus. The hook. Boston Dynamics showed its Atlas humanoid robot as a product direction, with deployment plans tied to Hyundai's manufacturing footprint. Context. Tesla's Optimus is part of the long-duration valuation story, reduce internal manufacturing costs, and eventually sell humanoid robots at scale. If other industrial giants operationalize humanoids sooner, Tesla loses narrative exclusivity. Details. Coverage indicates Hyundai plans to deploy humanoid robots at a U.S. factory in Georgia, with a product version targeted for deployment by 2028. Some reporting cites a plan to scale to tens of thousands of humanoid robots annually by 2028. Impact. Near term, this doesn't change Tesla's 2026 auto gross margin, but it can affect investor perception of Tesla's unique future tech premium. If humanoid robots become an industry-wide tool rather than a Tesla-only breakthrough, the multiple attached to that optionality could compress. Takeaway. For Tesla watchers, the key is evidence. Demos are easy. Real factory tasks, uptime, cost per hour, and safety compliance are what will separate hype from margin impact. Sixth, demand stimulation is back. Tesla is expanding leasing on cheaper Model 3 and Model Y trims. The hook. Tesla appears to be widening access to the most affordable versions of its best-selling vehicles through leasing. Context. When EV incentives fade or competition heats up, Tesla often responds with pricing actions, financing offers, and new purchase pathways to protect volume. The trade-off is typically margin. Details. One report notes Tesla expanded leasing to include cheaper standard versions of Model 3 and Model Y, which returned recently as Tesla responded to softer demand conditions after policy changes. Impact. Easier leasing and aggressive financing can keep deliveries flowing and help factory utilization, which matters for cost absorption. But if the market interprets it as demand weakness, it can pressure the stock through lower margin expectations. Takeaway. Investors should watch whether these offers are localized and temporary, or a broader pattern that signals a sustained price and incentive environment. Seventh, a quick misinformation check. The Tesla phone rumor is back, and it's not credible. The hook. Viral posts claim a Tesla Pi phone is launching in March 2026 with Starlink included, and the sources don't hold up. Context. For Tesla investors, distraction narratives can move social sentiment, but they don't move cash flow unless Tesla confirms a product line. Details. A fact check in Chinese language media traced the claim to content farm style sources, noting this Tesla phone idea has circulated since at least 2021, often boosted by concept images and now AI-generated content. Impact. Not a fundamentals event, but it matters because misinformation can temporarily distort retail sentiment and headline risk. Takeaway. Treat unverified consumer electronics rumors as noise unless Tesla confirms it in filings, official channels, or earnings commentary. Let's wrap it up. Today's big themes were autonomy competition accelerating, Cybercab timeline signals supporting the stock rebound, and factory robotics turning into a genuine multi-company race. All while Tesla uses leasing and incentives to defend volume in a tougher demand environment. For tomorrow, watch for any additional CES follow-through on autonomy partnerships and keep an eye on whether Tesla's rally holds on normal volume. That will tell you if this move was conviction buying or just a bounce. If you want daily, investor-focused Tesla coverage, subscribe to Tesla Daily News Podcast and follow us for the next episode.